Welcome to Peak Oil News for July 26, 2022. Just a quick update. It looks like the Canadian turbine that was stuck in Germany has been released and is on its way to Russia to be re-engaged into the Nord Stream pipeline. However, as reported in our last episode, the Russians are planning maintenance on another turbine and gas flows will therefore be reduced to around 20% of full capacity. Despite what some media outlets are saying, the turbine replacement had been mentioned by Putin last week and was not a surprise. But either way, realization that gas will be even more scarce in Germany sent markets there into a tizzy, with a 10% jump in European gas prices occurring. Now, let's turn to some news south of the border in Mexico. The United States is none too happy with new policies put into motion by the Mexican President Andrés Manuel López Obrador. The United States claims that the new policies give an edge to domestically produced electricity in Mexican markets, give Mexican state-run gas companies extra time to comply with environmental regulations, and that the Mexican government has delayed, rejected, or failed to act on private companies' application for permits. The United States claims that such policies are anti-competitive because they give PEMCO, the Mexican state energy firm, a greater edge in that market than private American firms, and that this sort of action is a violation of the United States-Mexico-Canada Agreement, which went into force July 1st, 2020. We have repeatedly expressed serious concerns about a series of changes in Mexico's energy policies and their consistency with Mexico's commitments. U.S. Trade Representative Catherine Tai said in a statement, she said, U.S. companies continue to face unfair treatment in Mexico. The dispute has escalated to the point that the United States Trade Representative Catherine Tai submitted a request for dispute settlement consultations, and under USMCA rules, the U.S. and Mexico should start those consultations within 30 days of the request unless they decide otherwise. And the United States isn't alone. The third partner in the agreement, Canada, has also submitted a similar request. But it is not all bad news between the U.S. and Mexico when it comes to energy. Mexico has increased its exports of crude oil to U.S. refineries. The U.S. has imported 31.68 million barrels of fuel from Mexico in the first half of 2022, averaging 5.28 million barrels a month, and exceeding first half of 2021 imports by 11 million barrels. Much of this is due to Russian oil being cut off from U.S. markets, but also because of new environmental laws in Mexico regarding the use of high sulfur fuels, which force them to be refined down to lower sulfur before use, a process U.S. refiners have robust capacity for. The U.S. is set to import even more residual fuel from Mexico by year-end than it did throughout 2021. When imports hit a record high of 47.26 million barrels, and that was up from 34.22 million barrels in 2019. Cornicopian news. Halliburton, the company that specializes in fossil fuel extraction equipment, sees good times ahead, for its company at least. The CEO stated that while central banks had taken action that would likely slow the economy, he believed that the oil and gas market fundamentals still strongly support a multi-year energy upcycle. He added, from a demand perspective, oil and gas remains a critical component of long-term economic growth. Post-pandemic economic expansion, energy security requirements, and population growth will continue to drive demand. He also seemed to think that oil prices were to stay elevated for the foreseeable future and that any economic slowdown will not solve the structural oil undersupply problem. Halliburton expects to see spending growth by North American operators to exceed 35% in 2022, pushed by both publicly traded and privately held producers. And in other Cornicopian news, Exxon is continuing to expand its operations in Guyana. The offshore operation has already found 11 billion barrels of oil and is now looking for permission from the Guyanan government to drill another 35 wells on the Stabroek Block in 2023. The drilling campaign is planned to last for 5 years. Exxon currently projects it will be producing around 850,000 barrels a day by 2027 in total offshore wells of Guyana. So no, it won't replace Russian oil. And in caloric energy news, looks like even if they are able to get grain out of Ukraine, it will be at an elevated cost. While Ukraine, Turkey, Russia, and the United States are expected to sign a deal later this week aimed at resuming the shipping of grain from Ukraine across the Black Sea, insurers are saying not so fast. Carriers of insurance will only insure ships moving through the Black Sea if they have an international naval escort and a clear plan on dealing with the threat posed by sea mines. And that, my friend, is going to increase the cost. There would have to be escorts, minesweepers, so an underwriter could say, that's given us the satisfaction that it's not just a gamble. At the moment, that's just a gamble. You wouldn't be able to go, said Roy Kolachichi, a partner at insurance broker McGill & Partners. And it looks like grain production in the United States is on the downslope, as the top 18 corn growing states are now officially under some type of drought stress. Missouri Governor Mike Parson issued a drought alert as over half of the state's counties are now in drought and 30% in severe drought. Worse, conditions are not expected to change in the meaningful future. Farmers are being forced to cull herds in many circumstances as grass is dying out. Other farmers have turned to hay, which could end up being problematic in the long run. Well, that's it for today, folks. Thanks for watching. Please feel free to like or subscribe or share. And most of all, please express your thoughts in the comments below. See you soon.